Hi there, and thanks for joining us. Would you like to have confidence and clarity when it comes to your retirement plan and investments? How would you like to have an actual plan and not a wish list of what the next 20 years would look like for you financially? Are you tired of worrying at night, wondering if what you're doing or not doing is the right course of action, second guessing your decisions or your financial advisor's recommendations with no real answers or verification that your plan will unfold the way you would like it to? My name is Megan Phelps. I'm a certified financial advisor and founder of Empress Investment Group, and we've worked with women in the Los Angeles area for the past 20 years to help them plan for their future, preserve wealth, and of course, protect their legacy. Now, in the next few minutes, I'm going to share with you how many of our clients and how I have achieved confidence and clarity around our financial plan and our investments, and how you can do the same. I know firsthand the struggles women face financially, not just from helping thousands of women over the past years, but also being raised by a single mother who struggled financially. She was left with 3 small children under the age of 5 when my father walked out. And many of these same tips that I'm going to share today were instrumental in her creating wealth, retiring comfortably, and living her best life. Now, we help women who are single, widowed, married, divorced, and who have experience with many different background stories, each with their unique makeup and background. So the reality is that regardless of your status or your net worth, most women share some common fears: running out of money, being taken advantage of, outliving their money, not being able to provide for their loved ones, and making mistakes that can and should be avoided. So if you have any of these fears, you're absolutely watching the right video. So let's get started. Going to share with you right now our presentation and training video, and this is Financial Planning with Purpose. Feel clear and confident about your financial future. Now, our mission is to assist women in creating financial plans with purpose. And this training video is going to cover 4 tips that you can use to easily start to take action today. Now, I will cover why these steps are critical and how these tips have dramatically changed our clients' lives for the better. Most likely you have one or more of these same concerns as the women we talk to every day. High fees, too much risk, fears about a market correction, questions about the longevity of your portfolio and investments, and of course, concerns about how you will pay for long-term care if you need it, or your spouse needs it. And there are always questions as well about taxes and how to reduce the amount of money you are paying to the IRS. Please hear me on this. Really, these are not, and let me repeat, these are not concerns that you need to live with any longer. These problems can be handled and lift a huge burden off of your shoulders. We all have enough to worry right now with our health, of course, changes to our lives with the pandemic has brought, and you should not also have questions about your financial future. So in this short 20-minute training video, I have 4 tips again that you can use right away to start building clarity and confidence and setting you on the right path to financial freedom. So let's get started with tip number 1. Tip number 1 is going to be to create a clear inventory of all of your assets and liabilities. Now, I know you've heard this before, but in all honesty, we meet with hundreds of women a year, and most women, when we first meet them, still do not have all of their assets and their liabilities in one clean and organized place. We call this our financial inventory planner, and this needs to be a bit more detailed than you'd think. So what details go into this financial inventory planner, you ask? Well, here we've listed a few of those items for you: your family information, your personal investments, your retirement accounts, real estate investments, estate planning documents, college savings accounts if you have those, cash flow, what are your income and expenses, and of course, your net worth. So I know that's a lot, and it seems like a lot to remember, and you may not know what information exactly goes, for example, under real estate section or the cash flow section of that plan, which is why we created our financial inventory planner to assist you. So at the end of this training video, you will be able to request this financial inventory planner via email or snail mail, and we will be sure to get that to you. Now, creating this organized inventory, even if it is just one time per year, is a huge benefit from not only planning purposes, but also from the standpoint of ensuring that your beneficiary designations are correct and for tax purposes. You may discover, for example, that you left money with an old employer, or that the interest rate you're receiving on a CD at the bank that just renewed is way too low. You may realize that your partner has money that could be consolidated, or that the names on one or more of your accounts is actually incorrect. Each and every time our clients update their financial inventory planner, more things come to light. Recently, we had a client who was able to uncover an old pension plan, which would generate about $400 a month to her in income. She wasn't receiving regular statements because she had moved, but we were able to track that down and get everything in order and get that income obviously coming in. So again, what we would like you to do is, if you have your own system, that's great. But if you would like a free copy of our financial inventory system planner, we will be happy to send that out to you via email or mail, whatever method you prefer. Just let us know at the end of the video by entering your info, and we'll be sure to make sure you receive it. In addition to that, we are also able to walk you through via phone. And if you have any specific questions related to your investments or your financial plan, please feel free to schedule a strategy call. It's free, 15 minutes with one of our certified financial planners if you think that that would benefit you. All right, let's move on to tip number 2, having a written financial plan. Okay, so now if you're retired or you plan to retire in the next 10 years, you absolutely need to have a written financial plan now. Now, the earlier you start, of course, the better, because this allows your plan to make adjustments if things aren't looking good. But even if you're already retired, a written plan is an absolute necessity. So what should this plan tell you exactly, and what should it do? Well, first of all, it should feed from your financial inventory planner that you created in step 1. So again, you absolutely need to take the time to fill out that workbook. Now, your written financial plan should contain all of the following information: your sources of income, your total projected monthly expenses, estimated earnings on investments, inflation estimates, and any goals such as purchasing a second home, buying a new car, spending $10,000 a year on travel, or paying off your home. All of these goals need to be integrated into that written financial plan. Now, once all of that data is actually entered, the plan needs to give you a measurement, which we call a probability of success, okay? So is your probability of success, is this plan's success probability high or low? Now, as I said, regardless if you are retired or not, you need to know your plan will actually work the way you intend it to, and that you can achieve your dreams. You can always adjust it, but you need to know you're on track to achieving the life that you want, or maintaining the life that you currently enjoy if you're already retired. Now, wouldn't it be nice to know, if you pay cash for a new car, for example, that the probability of your plan functioning in the healthy range, which is above 90% probability of success, would actually drop to 63%, for example? Most likely you would not buy that car, right? If you figured that your probability of success was above 90, and buying that car and paying cash for it rather than financing it dropped it to 63%, that would give you an indication of what course of action you should take. Now, what about working? Waiting one more year to retire, how does that impact the plan? If working one more year increased the probability of your retirement plan actually functioning and maybe got you 10 more years in retirement, would you make the decision to retire today, or would you hold on? There are a million different scenarios that can be tested based on each person's goals and financial objectives. We actually had one woman who came in who was going to retire, but she didn't know if her pension, along with her savings, was going to sustain her for the next 25 years. Her advisor was doing some very basic calculations, and by overestimating her returns and underestimating inflation, he told her he was confident that she would be fine. After putting everything into this retirement income prosperity plan, we were able to show her that if she left her portfolio allocated the way it currently was, paying the same fees that she was paying, which she didn't even know she was paying, that using all of this data and taking into consider inflation, her savings was going to last her about 17 years, which meant she was going to run out of money at about age 73. Now, I don't know about you, but most of us can't predict our longevity, right? But I know I don't want to pass away in my early 70s. So we altered her plan so that she was able to get it to last 27 years. Just by making a few minor tweaks, we were able to take her well into her 80s, which of course gave her much more confidence that she was going to be able to live the retirement of her dreams. Now, rest assured, I'm not saying you need to go change everything at this point. That isn't what I'm saying at all. But what you do need to know and to focus on is, does doing what you're currently doing, taking the actions that you are taking today or not taking today, does it provide you with a probability of success greater than 90% that you will not run out of money at some point in your life? Now, you may be also very much worrying for nothing, because a lot of women come in and we end up drafting this plan for them. And the reality is the probability of success is over 90%, and they've been worrying for no reason, okay? But there are also those women who come in and they have not been worrying at all, and they actually may be in harm's way. So the key is having a plan in writing that you can follow and maintain accountability. Let's move on to tip number 3. Now, tip number 3 is about managing your risk, understanding the level of risk in your portfolio and what you are paying in fees. Now, risk is a hot topic right now. We have the federal government literally pumping billions of dollars into the economy. Unemployment is still fairly high. Big and small businesses alike have been permanently altered due to the pandemic. Yet the stock market continues to go up and hit new highs. So what does this mean for you? Well, if you aren't in the market, you may feel lucky because you don't have any risk, but you have likely missed out on some very nice returns over the past year. On this flip side, if you've enjoyed those market gains, you may be wondering if the level of risk you have is in fact suitable, and how do you retain some of those gains that you've enjoyed? The reality is that timing the market is almost impossible, but selecting a suitable allocation based on your desired risk level and ensuring that your retirement income prosperity plan, that's your written financial plan, functions well with the volatility you may experience is absolutely critical. So we've had people come in to meet with us and they have too much what I call lazy money, which is money that's not working for them at all because they are too scared. We also have had women who have too much risk and don't even know it. One should not speak in terms of risk using these vague terms like conservative or aggressive, because one person's idea of conservative may not be the same as the next. You should know how your retirement dollars and investments are actually allocated, okay? And actually have a risk number that you understand from 1 to 100. So I'm going to show you an example of this here. You can then back up that risk number by seeing how it correlates with your existing portfolio versus how you score, okay? So with this risk questionnaire, it's used to ensure your portfolio is in alignment with your desired risk level, okay? It's not complicated and critical that you know what that number is. So what are we looking at here, okay? What we are looking at here is someone's risk questionnaire, all right? And their responses placed them at a score of 35, indicating they were only comfortable, you can see this here on the screen, a 35 indicating that they were only comfortable seeing their account value fluctuate at about 6%. Now, as you know, if you take some market risk, you're doing that for the potential upside. Her portfolio indicated that she would be happy earning 9% in a strong market environment, but not comfortable seeing fluctuation or losses in excess of 6%. So this was what we call her risk teeter-totter or her desired range. It scores a 35, okay? Then what happened is we took her actual portfolio and we looked at how she was allocated. Well, you know, from looking at statements, you don't really understand the exact level of risk that you're taking. You see the fund names or the stock positions or the holdings, and you kind of think, oh, I have a diversified portfolio because I have bonds and stocks, but do you really? Because I can tell you that not all portfolios are created as it relates to risk. So what we now are going to show you here is actually how this same woman's accounts were allocated. As you can see, once her investments were plugged into the system, it indicated that she was actually taking on much more risk than she was comfortable with. With her investments left unchecked, she could see declines in excess of 15%. You can see that here, negative 15.8%. And yes, she had more upside, about 26%. But for her, she valued security more than really large returns a couple of times in a decade. So this in fact, verified that she wasn't properly allocated and was taking on too much risk. So at the end of this video, if you want to see how you score and if you're actually allocated appropriately for current market conditions, your lifestyle goals, and your time frame, either you're retired or not, I encourage you to set up that 15-minute strategy call. We will email you the risk questionnaire. It takes less than 5 minutes to complete. And then when we get the results back, we will provide you with our analysis. This is one of the first steps in building confidence. How would you feel if you knew that your portfolio would not go down more than 5% or 10% or 25%? Or if you understood exactly what the fixed interest rate was per year and how that was going to play out and provide an income stream for you for life if inflation, for example, averaged 3% and you're only earning 4% on a guaranteed basis, which is hard to do right now, right, with this interest rate environment, but there are still some ways. So most women want that information and would sleep better at night if they could just understand what could happen with their retirement money and make decisions accordingly. All right, we are on to tip number 4, our last tip and my favorite tip, and this is defining your purpose. So this last tip may be the most important one that I give you today, and that is to define your purpose. Now, over the years, I've seen some very wealthy women who aren't fulfilled despite the size of their portfolios or their beautiful homes, mainly because they haven't found their why or their purpose. We've also seen women who have very little in terms of assets, but they are some of the happiest people because they are doing what makes their heart full. Building your financial plan around your life's purpose is honestly the most critical factor in enjoying your retirement and life for that matter. All too often, financial professionals focus on the risk, the returns, the allocation, the taxes, and miss the human factor that goes into the planning. Create a financial plan with purpose, because when your plan has purpose, you are far more successful and fulfilled. There is nothing more rewarding than seeing a client achieve her dreams and live the life she really desires, and it absolutely needs to be a component of your financial plan, that purpose. So what does this even mean exactly? Well, 2 things. Spending some time to figure out what you value most. Is it making memories with family? Is it traveling the world? Is it experiences? Is it charitable work? Or is it tangible items? There's no right or wrong. It's what you value and what you find purpose in. Moreover, does your financial plan actually support that vision? If not, why? Is your current plan simply made up of a bunch of numbers and statements with no consideration for the purpose you have in mind for the next 25 years or for your retirement? Now, I know this is probably something your existing plan is lacking. Very rarely do I meet women whose financial plan actually aligns with their life's purpose. However, understanding how to find fulfillment by narrowing down your purpose or putting it in writing has tremendous benefits. Now, this may seem like a tall task, so to assist you in drilling down on what actually that purpose is, we have created our defining purpose exercise. And to get you thinking, it's really used to get you thinking and forming your vision. So during your strategy call, we can discuss this in greater detail, but we're happy to send you a copy to get the juices flowing. I promise you, when you build your financial plan around your life's purpose, your plan has more meaning and has a greater chance of success, and you will live a life of greater fulfillment. I hope this brief training video has given you some insight and some things to think about. Now is the time to take action. What has held you back in the past? Have you heard something new here that you think you would actually like to try to do differently? We have a proven 4-step process called our prosperity plan process that can give you the satisfaction and the clarity you desire. We are here to help, just as we've helped thousands of women and their families over the past 20 years. And we're looking forward to talking to you during our strategy call and to get to know you better. Right now, if you could please schedule your call by clicking the link below, we will send you all of the items that we have promised. Thank you so much for watching.